Hello everyone, welcome to my channel. My name is Orlando, and today we're talking about what are the mistakes that I have made with my 4-unit. I'm really big on transparency, and that's what this channel is about. This channel is about learning from my mistakes, making a community where we can talk about our real estate mistakes so that the newcomers and people maybe that are veterans or people that are in it right now can say, I never thought about that, and use those things to problem solve. So I bought a 4-unit, and I'll put it up somewhere here, what it used to look like and what it looks like now. But I bought a 4-unit, and the 4-unit I bought, it was kind of rusty, dusty, dusty type of property on the outside, but inside it was immaculate. I mean, it was a really good property. The owner had built out each of the units with new paint, new hardwood flooring. The bathrooms were new. Everything inside of the unit was really good. It was just the outside that looked pretty bad. The outside of the property definitely needed some upkeep and some love. The siding needed to be done. The landscaping needed to be done. Parking lot needed to have some love done to it. All of those things I knew. As soon as I saw it, I said, okay, look, you go in and you take care of that stuff on the outside, and I knew that stuff, right? But here's some of the things that I have learned on this property. Okay, so my mistake number one was the utilities. Let me explain the story of the utilities. So when I first bought this property, I automatically saw that all of the units were on 1 meter, basically. They're on 2 meters, actually. But it wasn't individually, which means that each tenant couldn't pay their own bill. So I went in before I bought the property, I tried to speak to the electric company, and then I also bought an electrician in, and I said, hey, how much is it going to cost to individually meter these? So the electrician spoke with the electric company, the power company, utility company, and also I brought in a plumber, and they kind of like huddled all three together on the property, which was pretty cool, man. Just having everybody kind of unite to kind of figure out what was the best way to individually meter these properties. Well, it came back that if we go ahead and individually meter these, we're gonna have to rip out the walls. We got the plumbing is right here. And the power company basically said, listen, we can do all of that, but at the very end, we think it's going to cost you around $30,000 to do this. Now, here's the funny thing about that. That's $30,000. That's $30,000 putting everything in, but not fixing the damage that they're going to do, because they're not going to fix the plaster. They're just going to rip out the stuff that needs to be ripped out and put that stuff back in, put things in. If there's a floor that has to be chiseled out, that's what they're going to do. If there's plaster that needs to be, knocked out, they're going to do that. But they will not do the patch up to cover to make things look like back to normal, right? So they said, Orlando, it's going to cost you about $25,000 to $30,000 to do that once we get done. I would say, you probably should keep things the way that they were. I said, no problem, totally understand. I'm not going to pay $25,000, $30,000 when something is already working for the property. But I just thought that I could make the property a little bit better by individually metering them. So then let's just fast forward. I own the property. It's mine. And what do I come across? Well, at first, when I first started, I'm not a utility company, right? So I looked at the previous owner power bill, water bill to kind of gauge exactly what I was expecting. And I did this before I bought the property. So I kind of knew what to expect when it comes to paying for the utilities as an expense. So I kind of knew what to add to the rent. Well, it's kind of funny because even though I did that, I still saw a huge jump, maybe about a 20% difference in the amount of money that the previous owner was charging versus what was actually being used in utilities. So I said, I'm going to have to do that. But the problem is that I had already signed a bunch of tenants into 1-year leases. So what does that mean? That means that I couldn't charge that extra amount of money that I saw that was basically being charged in utilities that I didn't plan for, I couldn't add that onto the extra rent. So what does that mean? That means I had to eat it. So a couple of times I was looking at the utility bills and I was just like, man, what's going on? Why are these guys just juicing up, using so much energy? But you know, tenants will use energy, especially when they know they're not paying for it. It happens all the time. It's just the way it is. And you know, I end up having to seeing that. So what happened is that I knew when the lease was going to end, I was going to automatically add that premium in with a little bit of room in there. So if it was 20%, I was going to add in 25 to 30%. Now that may sound like a lot to you guys. Oh, a 10% buffer. But when you're dealing with, you know, a $300, $400 utility bill, it's really not that much when you're adding on to the rent. So I put that buffer in of about 10% on top of the 20% that I saw that I needed to raise when it came to taking care of the utility bills. And that is how I was able to solve that issue. That problem solving really kicks in when you're doing properties like that, where you have to figure out, okay, I'm losing money on these expenses. I could reduce these expenses by adding it on to the rent. So that's exactly what I did. The year came, I went ahead and added in that 30% extra on top of what I already saw was the utility bill. And then I didn't really have any issues from that point on because I had such a buffer in there that, you know, there was definitely enough money to cover all of the utilities and to cover everything else. So I didn't have an issue from that point. But there was a learning curve there of about a year that I had to deal with because I had tenants already in a lease. Then we have number two. Number two is the trash, right? And this kind of goes with the utilities. So the issue that I was having with the trash is that my management company would put the trash in their name, just like they would do the utilities. Utilities and the trash, they're not in my name. Your property management company should put it underneath their name so that they can take care of the bills, take care of any issues, and they can deal directly with the reps of those utility companies. That's the best way it's done. Well, anyway, when that happened, I live in the same local area, and when that happened, I saw a huge jump in the trash bill. I'm talking about a trash bill that I was expecting to be maybe $100 a month or every other month turned into being $300 to $400. And I couldn't understand. And I reached out to my property management and I said, what's going on with this? And they said, hey, Orlando, it's because your account is underneath a commercial account. It's no longer a residential. So I said, oh, okay. So I'm getting charged a commercial rate because of what? And they said, because it's underneath us and we have a business name, right? Our name is a LLC. So it is considered a commercial account. I said, but that doesn't make sense because that is a residential property. So I need to get charged residential rates instead of getting charged commercial rates because of a name, not because of the actual property. For my understanding, I told them, I believe that the property, when it comes to rates, is more important than LLC being the individual who's the controlling entity of that account. And they said, well, you know what, Orlando, that makes sense. That makes sense. But let's go ahead and let me reach out to my what's name. I said, well, let me tell you what. And you got to remember, guys, this was like 3-4 months in. And I was just like, this is getting ridiculous about the amount of money I'm paying for trash. Now, you got to remember, I'm paying regular trash bins that maybe are four trash bins, and you're paying $100 per. Now, that may not be big in your area, but in my area, that is really expensive when in my area, we're paying $40 every other month for trash, for a trash bin. So I said, you know, this is insane. So I told my property manager, hey, listen, we need to take care of this because the amount that you guys are charging me for trash is ridiculous. Ridiculous, especially when I saw the trash expense from the previous owner. And they said, you know what, Orlando, we're going to go ahead and take a look at it. Well, we went ahead and took a look at it. I got on the phone with the rep and she said, Orlando, You're right. Let's go ahead and redo this. And how does $130 sound every other month? Does that sound? We can do that for 4 bins. I said, that's perfect. That works for me. That makes sense rather than $400 every other month. And you see how I was really on top of my property management. This is one of the things that I want to really convey to you guys. You do have a property management team to help you manage the property, but you still have to manage the property management. That is so important. You got to remember, property management is definitely supposed to manage your property, but they have multiple properties. It is your priority to look at the numbers in that detailed fashion and say to yourself, this isn't right. I need to figure out the reasons why this isn't right. So you can see just between those two things, I probably saved myself going down to about $130 to that 400. What is that? $270 basically. So $270. And the electric was probably about another $150. If you add that all up together, I probably saved myself somewhere in between $350 and $420 a month, guys. And that is huge, a month. Remember that, guys. That can go towards your mortgage, that can go into your pocket. $420 at the max a month, guys. I mean, that's what you can do when you make sure that you pay attention. Paying attention to your properties by staying on top of the property management, looking at your expenses, and seeing where you can shave those expenses off. Not becoming a slumlord. No slumlord, but still getting rid of expenses that you can drop down directly from the carrier, from the utility company in this situation. So I learned a lot from that lesson. Hopefully that you can take some good lessons from that, guys. I'm gonna need you to watch this next video here. It will help you get into your first rental property. I also talk about the housing market, this crazy housing market, and I'll catch you guys on the next one. Thanks.